Welcome back. So cues are not too bad across Asia. Some of the markets are shut, but the ones that are open, for instance, Hong Kong is back. I mean, it's pointing to a recent 0.5% kind of a move. Lots of stocks in focus as well, and we will get down to that in just a bit. The implied open, let's look at that as well. It'll come up on the screen because while Wall Street futures are flat, Asia is not bad. And therefore, we're getting a slightly positive start, at least for now. Okay, let's get to stocks then. And we have our team standing by with the CNBC-TV18 list of top stocks for the day. Guys, morning to all of you. Indian hotels came out with numbers, Manglam, with everybody checking in and, taking these dream vacations. I'm guessing they were looking good.
Well, there is no surprises there. It's a great set of numbers that has come in, and it's a good performance that continues. The stock has been quite a wealth creator and currently very close to its record high as well. And the consolidated numbers are further aided by Taj Sats consolidation. Remember, they had added Taj Sats, the air catering business, in July itself. So 27% revenue growth, 30% EBITDA growth, margins crossing that 35% mark, and net profit growing at around 28.5% as well. Hotels, year on year, there was a mild decline in the revenues and EBIT, but that was largely done away with strong occupancy as well as ARR. So occupancy grew to 80.1% and average room rate grew by 14.4%. Remember, from 18,368, it's jumped all the way up to 21,013 itself. The company maintains its outlook for FY26, 30 new hotels, focus on total RevPAR growth, continued momentum of new businesses, and they're also adding a new kitchen at Jewar Airport for Taj Sats. All these factors should do well for the stock, expected to be in the green today.
All right, Manglam, thanks a lot for that. Well, let's hop across to Rima. She's tracking Coforge, and the numbers look quite good. Rima, tell us more.
Indeed, it's a good quarter, particularly delivering on the growth front. Yet again, the company's top line has gone up by 3.4% quarter on quarter, slightly ahead of the CNBC TV18 poll of 3.1%. They've wrapped up FY25 with a 32% top line growth. But remember, that includes the Cigniti acquisition. Deal wins are strong, which means it positions the company well for the upcoming year. In Q4, highest ever deal wins at $2.1 billion. But that includes that large $1.6 billion Sabre deal. But even if you strip that out, you would still be at a run rate of $500 million. The company's 12-month executable order book has gone up by 48% on a year-on-year basis. The management held a conference call yesterday where they reiterated, they said they're confident about achieving the $2 billion revenue aspiration by FY27 and also on expanding margins. Remember, the stock is corrected. It's down 22% on a year-to-date basis. MK today upgrades the stock, citing the recent underperformance and the correction in the stock price. Jefferies maintains a buy, and their revised target stands at 9,000 rupees per share.
Absolutely. And that's essentially the big outperformer. And Sudhir Singh, and we've discussed this over the last many weeks, how confident the Coforge management has been in the past. And, of course, the guidance coming through equally strong. It's also, of course, come off the lows, right? 6,000 to 7,500 in short order. So market was kind of well prepared for these strong numbers. So we'll see what the stock does. It'll be an interesting day. You'll hear from the management at 9:30. Onesource Specialty Pharma in focus now. Ekta is here with details. Ekta, morning.
Morning. Well, I'll look at the Q1Q numbers because that'll give you a more realistic picture of the company. Revenue was around 426 crores, so it was up around 9% Margins have improved quite significantly, so all the way to around 42.8% this quarter versus 36.15%, and a profit of around 98.5 crores. Now, in terms of the FY guidance, FY25 guidance, they've met it because they had guided between 160 to 180 million dollars and EBITDA of 55 to 61 million dollars. So they've met that guidance there. And in terms of what they are projecting in the next couple of years, revenue growth guidance of over 30% between FY25 to FY28 and steady state EBITDA margins of 40%. FY26 is expected to be a pivotal year for Onesource. Probably expect the stock to be in the green today on the back of numbers.
Got it, Ekta. Thanks a lot for that. Let's hop across to Ria. She's here to tell us about DCM Shriram. Ria?
Well, DCM Shriram has reported quite a good set of numbers in this quarter. The revenue has gone up by around 20% on a year-on-year basis. Both the net profit and the EBITDA have also seen increases of around 15% over the previous year. Even on the margin side, we've seen an expansion coming in at 14.1% versus 11.1% that we saw in Q4 of last year. Taking a look at the chemical segment specifically, caustic soda volumes were up around 29% on a year-on-year basis on account of the capex that the company has undertaken. Overall, lower input prices and operational operational efficiencies have led to improved cost structure for this segment. For the sugar and ethanol business, the domestic sugar volumes and prices have increased by around 19% and 5% respectively, both on a year-on-year basis. Overall, we've also seen better margins in this segment on account of higher sugar prices. The management has also commented on the results, saying that demand for caustic soda has improved, but chlorine has remained under pressure, and hence ECU prices are still suboptimal. They've also said on the sugar and the ethanol business that has remained largely stable, and sugar stocks for the sugar season 2025 are expected to be lower, which will support sugar prices going ahead. So overall, good set coming in for DCM Shriram, and we're expecting the stock to open in the green today.
Okay, Ria, thank you very much for that. Well, on to Ekta, who's with us in the studios today. Ekta, Glenmark Pharma on your radar. Morning.
Morning. Well, yes, one of their molecules under development, ISB 2001, has received US FDA fast track status. Remember that this is a molecule which is being studied for relapsed multiple myeloma type of cancer, that if in case, 3 treatments don't work on it, then this is the kind of drug that you go to. The drug is, the fast track that they've received from the US FDA enables expedited drug approval. And remember that they've already been granted orphan drug status in 2023. It's currently in phase 1, and the complete results are going to be shared on June 2nd, 2025 at the American Society of Clinical Oncology. HSBC had written some time ago on this, and they've written a note today as well. Don't have that note as of now, but HSBC is basically very bullish on the fact that this molecule could be an out-licensing opportunity and a re-rating trigger for Glenmark.
Okay, all right. Thanks a lot for that, Ekta. Well, let's go across to Vamakshi. Cummins, that's the stock in focus. The global parent went ahead and withdrew its guidance, and the commentary on India was weak as well. So we're bracing for a weakest set in Q4. Vamakshi, tell us more.
Well, absolutely, Nigel. Very good morning. Cummins definitely in focus after its parents reported its numbers for the first quarter. Now, the first factor that came out is that they've withdrawn the guidance. They've withdrawn the full year forecast, and they say this is on account of tariff-related uncertainties. Now, keep in mind earlier they had shared a guidance wherein the parent was expecting a revenue degrowth of -2% to a growth of almost 3%. The power gen revenues for the global parent were expected to expand by anywhere between 5 to 15%, while for the India region as a whole they were expecting a growth of nearly 10%. But now they've gone ahead and withdrawn this guidance given the tariff-related uncertainties. The second important point that came through from the earnings con call is that the revenue for all Cummins entities in India, which includes Cummins India, some other entities as well as JVs, in the first quarter, the revenue saw a downtick of almost 14%. The third point is the power gen business in India for the quarter ended March saw a revenue downtick of almost 11%. The revenue has declined as compared to the previous year, and this is mainly on account of the pre-buy that came through on account of the emission norm change in the same quarter last year. So therefore, given the kind of commentary that came through from the company, especially on the power gen business, which constitutes nearly 40% of Cummins India's revenue, negative read-through for Cummins, expect the stock to open lower today.
Okay, all right, Vamakshi, got that. Thank you very much. Cummins on our radar as well. Let's move on, talk about IEX. It came out with its business update. Vivek, morning, how does it look?
Well, good morning. That's right. So IEX is in focus. It's on back of the fact that the company has given the operational update for the month of April. So the traded electricity volumes, as far as the DAM market are concerned, up almost 26% on a year-on-year basis, 10,584 million units. The day-ahead market volumes up 3%. And when you're talking about the electricity market volumes, it's up almost 48%. Market clearing price, despite much higher volumes, remains quite steady at 5.2 per unit. The company attributes this to higher sell-side liquidity as far as volumes are concerned. Now, when you're talking about the renewable energy circuit, it's dipped on a year-on-year basis, but this is off a lower base and it's been quite volatile. That has been the trend as far as the REC market is concerned. A total of 2.9 lakh REC certificates were traded in April. It's a good it's a good print as far as the operational update for the first month of FY26 is concerned. Expect some green on IEX today.
All right, Vivek, thank you very much for that. Let's talk about the other company, which we're going to speak to a little later. CAMS in focus. Vamakshi is here with details. Vamakshi, morning.
Good morning, Prashant. Not such a great set coming in from CAMS. When we look at the revenue, the operational profitability, as well as the net profit, it's a mild miss as far as the consensus estimates are concerned. The revenue is seeing a degrowth of almost 4% sequentially. The operating expenses, on the other hand, are rather flat. Therefore, the EBITDA margin has come under significant pressure, down nearly 200 basis points, coming in at 44.75%. The net profit has also seen a sharp fall of almost 8% sequentially. Let's also look at how the different segments performed this time around. The major degrowth drivers for the company is the MF assets-based business, which saw a downtick of almost 5.4%. The MF non-assets-based business also saw a downtick of almost 4.4%. Think 360 AI and CAMS KRA too reported a degrowth in their revenues. But on the flip side, good performance, and in fact very strong performance, came in from CAMS Pay, up nearly 44.5%. CAMS Rep 2 saw an uptick of almost 26%. So mixed performance as far as different segments of CAMS are concerned. Let's also look at the company's operational performance then. Overall AUM saw a downtick of 1.5%. The equity AUM too fell higher by almost 3.1%. But keep in mind that the decline in the overall AUM as well as the equity AUM is much lower as compared to the decline that has been seen in the wider industry. So this is slightly positive. CAMS has also managed to gain its market share in AUM as well as the equity AUM. So therefore, it's a marginal miss, going with a mild red for this counter.
Okay, all right. Thanks, Vamakshi, for that. And in fact, we'll be speaking with the management, Mr. Anuj Kumar. The management personnel at CAMS is going to be joining at 9:40 a.m. We'll talk more about these trends. Back to Ekta then. She's watching out for a couple of other pharma stocks as well. Which ones are these, Ekta, and what's the news?
Well, I will be watching out for the pharma index because I expect a sentiment negative to at least weigh down. This is after the US president signed an executive order to boost US drug manufacturing. Now, it's important to understand that they are not disincentivizing imports at this point in time. What they're trying to do is reduce the approval timeline for pharmaceutical plants to be set up in the US, because there were some indications that it can take as much as 5 years. So according to him, 5 years is too much, and hence we need to expedite that process. Remember that the likes of Roche, Novartis, Eli Lilly, J&J, they've already indicated that they're investing in the US in terms of manufacturing. Now, what else do articles indicate today is that the FDA could enforce stricter reporting by foreign API producers. Non-compliant overseas plants may be publicly listed, could see surprise foreign inspections. Now, remember that a lot of the pharmaceutical companies are already used to complying by all of this, but this could be an additional sort of scrutiny which could weigh down negatively on sentiment-wise. Now, the bigger picture and the larger picture is that the industry is facing uncertainty over tariff rates and timing. So the US, remember, imports over $200 billion in terms of prescription drugs. He's indicated that the government has indicated that we could hear in terms of imports of probably in the next 2 weeks, import tariffs in the next 2 weeks when it comes to pharmaceuticals, and hence that is the larger picture which could weigh down.
All right, Ekta, thanks very much for that as well. Yes Bank is the next one that we want to highlight. Abhishek has got details on what he's picking up. Abhishek, morning.
Morning, Prashant. So as per LiveMint, Sumitomo gets RBI's nod to pick up 51% stake in Yes Bank. Now, this may value the lender at around $1.7 billion. Now, SMBC will either buy less than 26% or, they may do a merger through share swap. They may also buy up to 26% and then give out an open offer. SMBC's voting right in Yes Bank will be capped at 26%, and SMBC will buy up to 51% stake in Yes Bank at market price if need be. Now, CNBC-TV18 has not verified this news report independently. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. We'll keep an eye out on that one. Well, let's do a quick recap of all the top stocks we covered for you. We have Indian Hotels, Coforge, Onesource Specialty Pharma, DCM Shriram. We have Glenmark Pharma, IEX, as well as Yes Bank. All of them will be reacting to positive news flow. On the flip side, 3 of them will be reacting to negative news flow. CAMS, Cummins India, and Pharma stocks. Let's take that mandatory break, come back, and we'll have the management of J&K Bank. They'll be waiting to discuss the past quarter's numbers and how do they see things pan out going ahead. Later on, Prakash Devan as well will be joining in for some fun market check.